everyone. Brother Al McClaney with this week's stewardship video. And this one is inspired by my wife, Janine. She sent this to me in a text. And I thought it was an interesting slide. It says, success is not always what you see. You can see the person, the rabbit to the left with their carrot, and you can see just a little bit of the growth above the ground. And then you see the other rabbit smiling, and they got all this growth above the ground, but a little bit below. So oftentimes I looked at this, and there's a quote I've seen before is that if you can see it, then it's not necessarily wealth. So what we're talking about is oftentimes you'll see everyone with these different trappings. You'll see maybe a luxurious car. You'll see a big, huge house. And if those are not debt free, then that's actually a liability if you're calculating your wealth. And we talked about this months ago. How to calculate wealth is you take your assets minus your liability, and then you come up with your net worth. Before we get too much further, let's read the disclaimer. No advice should be seen as a recommendation. So I'm not a licensed financial advisor, and it's for educational purposes only. So what we want to be careful of is having the look of wealth, but it's not really wealth. It's actually a lot of debt. And there are several scriptures I want to use as baseline for this week. And the first one is Proverbs 13:7. And I call that my millionaire mind, or millionaire next door. These were two books that were written by Thomas Stanley. And in each of these books, it talks about what's the millionaire mindset? How do they think? Then also in the first book they did called The Millionaire Next Door, there was a phrase that coined out of Alabama. I mean, not Alabama, but out of Texas. It says big hat, no cattle. Means that the person looks the part, but they don't have anything backing it up. The other thing in Dallas that we would say is $30,000 millionaire. A person makes $30,000 a year, but they may have a Lexus, or they may have all the brand name clothing, all of the trappings or the look of what they believe a wealthy person exhibits, but in actuality, they have $100 in the bank, or no savings at all, no investments, having the look of what people believe is wealthy, but not really wealthy uh, in substance. So Proverbs 13:7 says, there is one who pretends to be rich, yet has nothing at all. Another pretends to be poor, yet has great wealth. And the whole premise behind those two books, The Millionaire Next Door and The Millionaire Mind, is that the study they did showed that the millionaires lived in not necessarily extremely affluent neighborhoods, but they may live in really, really nice middle class homes. Um, and they drove one of the most popular vehicles was the Ford F-150. They did not wear Rolexes. They often had very what we would call common middle class type look versus someone who may be showing everything as flashy. So I commit to you to read that book, The Millionaire Mind and The Millionaire Next Door by Thomas Stanley. Proverbs 21:16 and 17 goes further to say, the man who strays away from common sense will end up dead. A man who loves pleasure becomes poor. Wine and luxury are not the way to riches. So here, this scripture, I think, follows up beautifully to Proverbs 13:7, in that it's talking about being, living below your means. So Mark 4, verses 18 through 19, the Message Bible says, the seed cast in the weeds represent the ones who hear the kingdom news but are overwhelmed with worries about all the things they have to do and all the things they want to get. The stress strangles what they heard and nothing comes of it. So what this is saying is that as Christians, we hear the word, but we become so overwhelmed with either our worries or on our path or journey of trying to acquire things. Dr. Rick Warren, who's the Saddleback pastor, talks about affluenza, which is a talking about affluence, but then he makes it into like almost a disease. That's the a disease of acquiring things, you know, of being affluent, and he just calls it affluency, or affluenza. So there's a great tool to help you in this area, and I mentioned this before. Copeland Financial Ministries. In fact, they are doing a class coming up in July. And so on this slide, you can see Thursday, July 22nd begins the first class. And this is 12 weeks, and the class is free. There is a book you can purchase, and you can purchase as a PDF, or you can have the book shipped to you because they're out of Canada. And either way, it's not required to you have the book in order to go through the class. In fact, you can go through the class, but I would add, go ahead and get either the book or the PDF. The PDF is like $15 and they'll email it to you. The book, I think, is like $40 plus shipping, but you don't need to have the book to go through. So when you register, Tom Copeland, not Tom Copeland, yes, Tom Copeland is the head of this ministry, and he just as a gift to the body of Christ, these facilitators who do this are not paid. They are actually just doing this as a um, purpose given to them on God, as a on their heart by God. So make sure you register for this. You can go to copelandfinancialministries.org, and then you can scroll down to events and you'll find this one July 22nd. So let's do a little transition into this week's earnings. As I've been talking about, it's winding down. We're coming out of earnings season, but there's still several on here that are reporting that will be important regarding the market. Now, just because there's not a lot of companies reporting here, this is most likely not going to have any effect on the market. So we can see from a tech standpoint on Tuesday, Oracle is reporting. That we can see on Wednesday, Lennar Homes, that's a home builders reporting, and then we see Kroger on Thursday, Adobe, and then Smith and Wesson. So from these, I would say, look at them and see if they could be potential investments. I'm going to highlight a couple of these on here. And again, the ones I'm going to highlight after this slide are not a recommendation or advice, not a financial advisor, educational purposes only. So let's take a look at a couple of these. Lennar Homes, this is a home builder, and this would be a play and looking at investing in the red hot housing market. You can see the stock has come down in the last couple of weeks from off of its high. This may be a good opportunity to seek some investments in Lennar. And if you have a brokerage account, see if these can be bought as fractional shares. Like if you have Charles Schwab or Fidelity, they have what they call fractional shares, where it's not the same price of $92 in this case. $92.74 would be one share. But in this case, in the case of fractional shares or stock slices, which is what the companies call them, it could be whatever the dollar amount you have. So Lennar is stock symbol LEN. And then you saw also reporting Kroger. It's off of its high. So it's come down, closed at $37.81. This may be one that you don't even need fractional shares or stock slices. And maybe you have enough to go ahead and purchase these shares outright. And this will be a play on the fact that we are America's, we call it grocery store. And in this case, it'll be playing off the fact that this is a necessity that tends not to uh, go bad, go up or down based on the market, but it's one of the needs of necessity. Everyone needs to get groceries. Still, people are doing cleaning supplies, and Kroger may be a good investment to play that. The last one is Smith and Wesson, which is the gun company, and in this case, it could be a play on just the amount of unfortunate violence we've had. As I were doing this recording in video, they had announced in Austin, Texas, there was a mass shooting. At this moment of the recording of video, there was no one who had died, but I think it was 14 people who had been critically hurt by a gunman. What happens is when these things go on, gun and ammunition stocks often will go up. Now, this is above its 21 day. We've talked about that before. Maybe you look and see if there's a dip. And some places, I don't think Robinhood allows you to do this, but in some brokerage companies, you can put what they call a limit order or conditional order, in which you say, you know what, this is a little high now, $21.22, which is what it closed on Friday. I'm going to wait and see if maybe it'll dip below its 21 day. And maybe I'm going to put in a order of 20, or maybe come down to its former support and put in an order at $19. And I'll use a conditional order or a limit order, which is I'm only going to buy it at 20. And then at brokerage company allow you to do what they call a GTC, which is a good to cancel. So that won't feel, or you won't purchase that until it reaches the price, stock price that you want to purchase it at. Last two slides we always look at the overall market, and we can see we've come out of that chop. Looks like we're off and running in June. This is the S&P 500, 500 largest companies that are traded on the U.S. Stock exchange. And you can see in this case, the S&P 500 has moved past what would now be its support, and is going up and continuing its upward trend. And that could be the jobs report, which turned out very good report when it came to jobs. And I think they did the consumer price index is either this week or next week, and that was good news. And that often will have a positive impact on the market. And here's the last one that we always look at, QQQ, which seems to be getting out of its way and has broken back out well above its 21 day. It's now out of that sales cycle that was happened several weeks ago, and it looks like back to going into its upward motion or trend. That's it for this week's video. Just a reminder about, that big hat, no cattle. Avoid the look of wealth, but have real wealth. And if you look at that slide, the real wealth is things people can't necessarily see. Stocks, mutual funds, what's inside of your 401k, your businesses, those are things that people don't necessarily see as trappings of the rich. And, there was a show that used to come on, the lifestyle of the rich and famous, but that also could be the lifestyle of someone who's in huge debt. And not Rick Warren, but Warren Buffett once said the saying, when the tide goes up, meaning you're on the beach, when the tide goes back out, that's when you see the people who are skinny dipping, meaning that there are people who have had that look with the Tesla, and there's nothing wrong with a Tesla if you can afford it, that have had a certain look about them. But then when economic times have been stressful or have come up to be challenging, you find out that was all debt. They had just acquired a lot of debt, but they didn't really have any assets. As always, you can do a search on YouTube under Al McClaney and subscribe to this video. And when I make the video and post it, you'll actually get alert or notification if you set it up that way, and you can view it. You can always email me at a_McClaney at yahoo.com. And as always, I always quote my pastor, Pastor Denny Dwight Davis of St. John Baptist Church. He says, have a good week and remember to keep a good spirit. And I always say on this video, remember Jesus is Lord, therefore he is owner, but we are his faithful stewards and we utilize his principles for his resources that he's provided us. See you next week.